All right, ladies and gentlemen, welcome back to another episode of the Market MadHouse Show. My name is Cyprian Francis, and broadcasting with me from Chicago, Mike Patton. Good morning, Mike.
Good morning.
Today is August 17th. We're kind of in the middle of the summer thing. The markets have been rallying. And this morning we had, I would say, mediocre retail sales. What are you seeing on your end of things?
Okay, yeah. So, as far as the news is concerned for retail sales, core retail sales actually did come in better than expected month over month at 0.4%. The expectation was negative 0.1%. Previous one was 0.9%, which was at the time worse than expected. So that's actually an improvement, but retail sales basically came in worse overall month over month. It came in at 0%. So basically no gain, no loss. The market was expecting a gain of 0.1%, didn't get that. So basically, yeah, core retail sales look better, but I guess with the other number being negative, it kind of cancels it out. Yeah. So the other thing that came up overnight was in Britain, inflation year over year came in at 10.1%. So that's huge. The expectation was 9.8%. It's funny when I look at these economic calendars, they are still reporting these numbers like they were, like if let's say we're back during the quantitative easing phase right after the financial crisis, any inflation was considered good. Like, well, we want more inflation, right? So the number shows up as green when actually it should be showing up as red because it's actually not what we want. So yeah, it's the markets clearly have responded. The S&P is down. I think the world is pretty clear that inflation's not going away. So now we see it in Britain, and of course we're probably going to see more of it over here.
I imagine that 10% is just a psychological number too. Like, oh my God, 10%, right? In the
Right,
US, we don't got it that bad. We're still hovering at that 9%, but
we're,
10%,
we're
I mean,
right
you
there.
guys you guys got problems.
Yeah. Right. I mean, we're all in the same neighborhood right now, but it could obviously get a lot worse.
Yeah, and let's see. We had some oil numbers this week. That's keeping oil pretty steady. Would you
Yep.
agree?
Yeah. So oil inventories, they had a decline this report this morning. So at first, oil prices were up, but they're not up right now. And they actually slid right back down to where they were. But it shows here, I'm looking at the numbers, U.S. crude stocks or inventories, that is, fall 7.1 million barrels. That's a lot, by the way, folks. Anything over a few million is a lot. So 7.1 is a lot. Crude oil exports hit 5 million barrels per day, the highest on record. Russia starts to boost oil output on strong Asian demand. EU, US studying Iran's response to nuclear proposal. We also had a strong drawdown in refined products like gasoline and heating oil or in diesel. So basically, demand is still there because remember we had this 2 weeks where we saw these inventory bills. Now all of a sudden, wham, we get this big drawdown. So it looks like we're going to see a recovery in oil prices pretty soon. But as of right now, they're still hovering in the mid 80s, which is fairly low compared to where we were before. But by every industry expert, oil is still on a structural long term bull trend. And there's no question in my mind about it. There's no way that I can imagine that oil prices will average less than $100 a barrel this year. I mean, it's always possible, but not likely. So that means that as energy prices keep going up, that means the cost of goods and services keeps going up. And that means that basically eventually we're going to see higher inflation numbers here as well. So I don't think we're anywhere near out of the woods. The current administration, they just passed, the Biden administration just passed what was it called?
The
Inflation.
Inflation Act. Yeah, it's
Yeah.
the Inflation Act.
And I'm like, okay. And they said $780 billion. dollars. I'm like, okay. And what does that mean? Like, I read it and I don't get how writing up more money is supposed to reduce inflation. I'm like, okay, exactly how is that supposed to work? So obviously it's all political showmanship. But at the end of the day, They can't do anything about it. Well, they can, but as far as most things go, they can't do much. But as far as China and Russia and India and U.S. and NATO and all that, they could do something there.
Yeah, and since you touch on those on that topic, right? Oil is a big conduit of all these nations, and
Right.
I believe one of the former, what is it, Secretary of State, right?
Hmm.
Henry
Henry
Kissinger
Kissinger. Yep.
made some comments about, hey, if we keep this up, we're going to be in trouble, especially with the two big powers, China and Russia.
Yeah. So Henry Kissinger a couple days ago, and he's been vocal about this for a while. Now everyone has different opinions about Henry Kissinger, but obviously a very famous, very influential former Secretary of State. And basically, what he said was, we are currently on track for war with Russia and China. He actually said we're on the brink. We're on track to the brink of war. Um, he's right. He couldn't be more right. The writing is on the wall, right? I do think, and this is just my strong opinion, but of course I grew up here in the Western world, so I do have a good idea of how this works. But as we all do here, but I would say this: I think what's happening right now, the Western world is in turmoil. I mean, politically, economically, socially, there's a lot of really bad problems, like kind of stretching and pulling everyone apart. And we've had periods in the past that were comparable in some ways, but the difference is we've got real deep economic pressures. We have a pandemic. We have all sorts of things happening right now that weren't happening, let's say, in the 60s. Everyone usually likes to compare it to the 60s. Well, the 60s, you had the country was pretty much on strong footing globally. That wasn't really the issue. Now we've got all these geopolitical tensions as well. Um, and I really think that the current leaders in the Western world, for the most part, are really not capable or skilled at dealing with the fact that other people, other countries have different ways of viewing things. I really think that we're so used to everyone just by default going with our line of reasoning that now that we're seeing countries like China, India, Russia really saying, no, we're not going that direction. We're going to do something different. Now we basically are not prepared for that. So it's like we're just going to shout and yell and say, hey, you do what I tell you. It's not working. So right now, all that's happening is China, Russia, and India are actually moving very closely together. And really, I don't think a lot of people I think people that are familiar with the geopolitics understand how big of a deal that is. But for those of you who are not, just put it this way: population wise, that's the majority by far of the world's population between India and China alone. Russia's not a huge population country, but it has tons of space and tons of resources and tons of nuclear armaments too. It's a military power. They have very strong technology. So does China. So basically, if those three are becoming more aligned, that's a testimony to a failure of policy. In other words, it's not that China and India working closer together or China and Russia working closer together is necessarily bad. That's not what I mean. What I just mean is that why are they getting closer together? They're getting closer together against us. That's not what you want. So if they're getting closer together because hey, we want to build economic ties or we want to reduce tensions between our countries, etc., good. But that's not what's happening. They're basically looking at it for what it is. They say, okay, so basically that's a threat. We see them as a threat, they see us as a threat. So unfortunately, I think that this is a situation that's really, really, really going the wrong way, and I don't really see too much of a, I guess, conviction from leadership around the globe, especially in the West, that this is something that needs to be addressed immediately. It seems like they're just kicking the can down and saying, "Hey, we're just going to stay our course. They're going to come to us," but consistently, that's not what's happening. So that that goes back to the issue with inflation. This whole conflict both the hot war in Ukraine as well as the Cold War between the U.S. and Russia, China, and not necessarily India yet, but we keep being more antagonistic towards them every time they don't want to take a stand with us. So therefore, we're kind of pushing them in that direction where they're probably going to be more antagonistic towards us. And all that does is basically means that we're shut off from markets that we want to have access to, grains, oil, energies, etc. Europe is just basically getting decimated by this whole thing, and it just has to bleed over other places. You can't isolate that problem for one place in the world and say, "Oh, that's just a European problem. They just have energy problems." Yeah, but energy is a global market, so if it's being bottled up, then it's going to affect everyone, as we've seen. So, in short, that needs to be addressed much more quickly and much more decisively than it is. And if it means that you have to lose some face, if we have to look like we back down, fine. I mean, is it really worth standing your ground for something that's not really anything more than just a show of of strength or whatever? So Kissinger's right. He's dead right that this needs to be addressed differently. But unfortunately, I think the leadership currently is just not prepared for that.
Yeah, it's almost like everyone was gung ho about globalization, and 20, 30 years later, after we've kind of connected globally, we're now starting to be thinking about, oh man, we might have to be self-sufficient. So
Yeah,
we need our own energy, we need our
yeah,
own production, right?
yep,
And the supply chains and all that can affect a lot of different businesses. So we'll definitely keep an eye on that. But at the end of the day, the reason we have this show is not because we care about politics, is because we care about making money, right? We care about
absolutely.
investing, trading, and taking advantage of these opportunities. So as more drama continues to unfold, I believe there's going to be more opportunity, and that's what we want to be. We want to be involved in. We want to be on the right side of things, and that's why we do the show. So before we go continue on, let's go ahead and invite everybody that's watching. Maybe you're watching for the first time. In the next segment, what Mike's going to do is go over a couple names that are in the news or that are seeing a lot of action, and then we're going to use Madison Trading software to give us analysis to tell us whether it's a good buy or it's a good sell, and give us a little bit more information. So if you're interested in following along, giving the software a try for yourself, head on over to MadisonTradingSoftware.com, sign up for the demo, and you'll have this wonderful tool to help you find winners. And so one of the names that I saw a lot in the news yesterday, a lot in the news just recently with this recent market rally, is Bed Bath and Beyond. And if
Right.
I'm not mistaken, they went bankrupt not too long ago, right? So they've become like this darling meme stock, right?
This is true. So, Bed Bath and Beyond. Let's just put it out there. This is a company that's absolutely bleeding money, right? Let's just look at the numbers, for example. So here are the fundamentals. I just want you guys to take a look at this. So here's a sales graphic. These histogram bars are tracking the trailing 12 months value for sales. Now, as you can see, in 2017-18, it was fairly flat. Then starting around 2020, you see this perpetual decline. Now, notice that decline started before the pandemic. So that didn't start because of COVID. It was already going that direction before COVID. COVID just made it worse. And basically, this company's just been losing and losing sales revenue. They're net negative on income. This is their earnings history on a quarterly basis. So you can see that the line pointing down means that they lost money. So they lost money here, they lost money there, and they lost they're expected to lose money this next upcoming report. Notice that it's a deeper line. So there could be a big surprise and they actually made some money, but it doesn't change the picture. The picture is this. It's a dying business. It's just a business that's not doing well anymore. And eventually every business goes under. For example, let's just look at some examples of businesses that were much more powerful and impressive. Let's look at, for example, America Online used to be a dominant force in the markets. Everyone had AOL this, AOL that, and then what eventually happened? Eventually, people start using other services like Google, Yahoo email, etc. And eventually, the whole population that was really AOL focused, they got older, and basically things moved on. Or you could look at Blockbuster Video, another great example of a really strong player that disappeared. Bed Bath and Beyond was never that impressive to begin with. It was a store chain that was successful, but it wasn't like something that everyone's like, "Oh, Bed Bath and Beyond, I got to go there." They never were Target, they never were Walmart. I mean, they never were that type of company, right? So, in short, they're just a brand that had its day, and now it's on perpetual decline. Now, one of the things about meme stocks is that no one cares about stuff like that. Well, maybe they do, but basically, this is a short squeeze rally. Okay, so when we go to the chart, the reason why this stock is shooting up over here on the right, and let's zoom into a shorter time frame so it's easier to see. See this jump here at the end? That is due to what's known as a short squeeze. Now, for those of you who don't know what that means, let me break it down for you. So, firstly, short squeeze. You have to have short sellers, people who hold stock positions that are designed to make money if the stock price goes down. Basically, it means that you sell shares that you've borrowed. You borrow the shares first through a broker, then you sell them on the open market. The broker notes the price you sold them for. Your account is shown to have sold at this price, but you have to give back the shares later, which means you have to go and buy them in the open market from somebody else who's willing to sell them. So, what is your goal? Your goal is to sell them first. You borrow the shares, you don't own them. You borrow them from somebody else who owned them. You get to sell them, but you're on an IOU. You have to give those back at some point in the future. And when you do give them back, you want to get them back, buy them back from the market at a lower cost. So it's like someone giving you, letting you borrow their house and you sell it, and then they say, "Hey, I'm going to come back later." So now you got to go back and buy it from the person or someone that whoever owns it at the time, but hopefully the price goes down. Of course, that's not what we do with houses, but you can do that with stock. So in short, you have people betting against the stock when you short sell. That means you're expecting that the value of the company is going to go down. So why? Because of all the things we just described. The business is failing. They're losing money. Income is going down. It's getting worse and worse, right? Now, it's possible they could turn the business around, but right now the momentum is clear. So, what happens is when this occurs, you get a lot of hedge funds that sell short companies like this because they realize those companies should lose value, and as the company value goes down, remember, they're looking to buy back those shares at a lower price later than they originally sold them for. Now, what happens in a short squeeze is that you get a bunch of buying pressure for some reason that pushes the stock price up quickly. And as it goes up quickly, the short sellers are forced to have to get out of their shorts because they're either losing too much of their profits, that's one way, or the price of the stock actually goes higher than where they originally sold the shares, and therefore they get into eventually what's called a margin call, which means that their positions lost so much value against them that the brokerage firm requires they put in more capital. This is very complicated stuff, I know, but let's just follow the general point. The general point is, if the people who are short the stock have to get out, since they sold first, they can't sell again. They have to buy to get their way out. Because remember, they borrowed shares and sold them, but they have an IOU that says, "Hey, you will bring back these shares later, one way or the other." The person who loaned the shares doesn't care. They just want them back. They don't care if the person lost money or gained money. It doesn't matter to them. They just want the shares back. So if the stock price goes up too high, however, you are forced to give the shares back because you can't afford to stay in that short position. It's going too far against you. So when that happens, everyone starts rushing in to buy whatever shares are available. And when you got a lot of big money buying into a smaller pool of shares, it pushes the price up. And when that price goes up, then other people who were already short, who were okay at first, now the price is going up even faster. They got to get out too. So then they start to buy, and that pushes up even faster. And it starts a chain reaction called a short squeeze. That's what basically just happened. That's why the price went up so quickly over the last couple of days, because of that short squeeze. Now, whether or not it's over, we don't know. You never know when it's over until it's over. But as of right now, it looks like it's still in place. I wouldn't be surprised if tomorrow Bed Bath and Beyond is trading above $30. I also wouldn't be surprised if it's trading below 14. The point is, you can't know what's going to happen in this situation. No one has a crystal ball. Only thing you can expect is a lot of volatility. So the Madison platform just tells us the bottom line about this. It shows us the technicals. We can clearly see the technicals are very strong. This thing is flying. It's breaking out of all the volatility. This is one of the topics we discussed before. These volatility channels, we're broken way outside of that. That means that this is hyper bullish. The screener tells us on the score that we're definitely in green for technicals at the top button. But notice that we're not looking so good on the other factors. We're not looking good as far as what institutions are doing. They're selling mostly. Valuation is high. Surprisingly, fundamentals are neutral right now, meaning that they're neither improving or getting worse. That doesn't mean they're good fundamentals. It just means they've gone flat. So the system is more about things degrading or improving than it is about their absolute level. So basically, what this is saying is that the bad fundamentals are just stabilizing. So therefore, there's nothing really going on there. So with this sort of stock, you got to be careful, guys. I'll go over the technicals here in just a moment, as far as what you can expect. But basically, yeah, Bed Bath & Beyond is not the only stock that's done this. There've been others too that have rallied recently. AMC was rallying for a while. Fubo, FUBO, is another stock that's come up on the meme stock radar too. So all these stocks basically have the same thing in common. They have this late stage move in August that's pushing them up sharply, and it's obviously coordinated movements by people online trying to force some hedge funds to get short squeezed. So we'll see.
Yeah. So there's different So what you're saying is there's different strategies to approach the different names, right? And with the meme stocks, your gauge, right? The Madison, color gauge is kind of all over the place, right? Technicals good, fundamentals bad, other stuff neutral. So
Yep.
because you're not getting enough of the green flags, as we'll call them.
Hmm.
It's something to just keep on your radar, or maybe even potentially look to short over time. I mean, I guess you don't want to do that if it's a short squeeze, right?
No, you don't want to see. That's the danger. You don't want to if you're going to short some one of these stocks, you got to have a very good, sophisticated approach to trading. You're going to have some options positions, etc., not just stock. Otherwise, it's going to be very difficult to manage. So for the average person, I mean the vast majority of people out there, even if you trade professionally, I would say you probably don't want to be short this stock. Now, if you're a buyer, there are times to get into these, and that's what I was going to go over a little later. So I'll save that for the last part when we go over how to find meme stocks. But you can actually find these. The software is actually very good at identifying potential candidates, which I'll show you how it does that. And then once you find them, you're basically just waiting for that moment when the meme stock buyers flood in, and as soon as they start to go, it just starts a chain reaction. So the key with meme stocks is you got to get into them early. GameStop, for example, before they even came up with the term meme stock, we had gotten into it in 2020 when it was like what $13 or something like that, and we were actually going all the way until January, just one day after another, just following it, looking for entries and exits until finally it got too crazy and we decided to back off. But that's a great example of how that works. Like you can actually play these things, but you need to know what you're doing and you need to have the right tools to find it.
Yeah, and I imagine you want to get in using the tool, the rationale behind the tools, right? Like there's
Mhm.
certain volume spikes. The reason that the Madison trading software is so powerful is because you can run these scans and get these names on your radar before it hits the news, before it hits Reddit, before everyone's like, "Oh, why is
Yep.
XYZ company flying? Oh, let's make something on Twitter and put a meme about it and hype it all up." You want to get in before before it's all on the news and all that. And that's what the software is so great at. So, is the next name that we're going to talk about, is this a name that was picked up in one of your recent scans? The ticker is PGR, Progressive
Progressive.
Insurance.
Yeah, Progressive showed up because it broke out of the volatility channel here. That's how it showed up. So as I was looking for trades, I was looking for something that broke out of that top, and this one had. Um, and more importantly, this actually has a nice overall trend. Now, it does have some drawbacks, and I'll just go over them quickly. We don't have much in terms of aggressive activity on the insiders, but we do have a clear money flow positive. Like we can see their buyers coming in. And we talked about this in a previous podcast that I like to find stocks that suddenly have positive money flow, and they have basically a neutral overall inner circle score. So they're just now starting to heat up, and that's where I want to find them when they're just starting to get interesting. Valuation, we are trading in high levels for PE ratio, et cetera. This is something that has to be considered too. That when we look at the numbers on PE and price to cash flow, these are high. So if I'm going to get into this stock, I need to know exactly why people are willing to pay that much now. And usually what the reason why is because of expectations for future profits. In other words, what we see now is not going to be reflective of what's coming, is what the market seems to be suggesting. If I jump over here to the analysts, so far, no, most of the analysts see the stock being lower than where it is now. Was not a good sign there. So in I would say in short, something developing right now in Progressive, and I know why the stock is up today. It's up because some news came out. They released their July results, and their July results were pretty strong. Then these are not earnings results. This is just like a report about what they've done, which is similar to an earnings report, except it's not an actual earnings date result. So they showed their numbers for July and July only. And I don't have it on the screen, but I'll just tell you that their net premiums written were up 8%, net premiums earned up 9%, but net income's up 170%. Per share available to common shareholders. I don't know what that means, but total pre-tax net realized gains is up 153%. So these are really solid numbers, and I think that's what the market is deducing, that these numbers are suggesting something to come, that there might be some better opportunities. So sometimes on the software, you get an early warning before the actual reality hits. In other words, you see the people in the money flow, they're buying in. This is not like a meme stock, guys. This is not something that you're going to hear about all day on CNBC. It's an insurance company. These are boring. People barely ever talk about them. But when something's going on, you're going to see it first in the money flow. When someone's got a clue, they got a hint, or some groups of people believe that this stock has something coming that's really good, they're going to start buying ahead of time. They're going to start buying in anticipation of that thing that hasn't occurred yet. And that's what seems to be happening. So that's why it's on my radar, because the technical score is solid, the money flow is solid. And if I look at the other numbers, I'll skip the valuation, because valuation, again, is based upon the numbers at the time. And until the new earnings numbers come out, we won't really know what the valuation should be. But we can see the overall fundamentals are neutral. And we can see we have some money flow coming in. So this one came up on the radar for that reason. And this technical breakout, these don't happen very easily, especially on a stock like Progressive. If it's on like Bed Bath and Beyond, sure, that could do that because it's a meme stock. But a normal stock getting outside these price channels and really trending like it is now is difficult. So what I think is going to happen is eventually it's going to pull back. And when that does happen, that's where I'm going to look to strike and try to get in. So I'll definitely want to put this out as a symbol, or sorry, as an alert for the room, a signal for the room. But I'll show you like two examples. Like if you see over here, let me shrink this down so we can see it. Right here, you can see we broke out the top. Then we came back down, broke out the top, then we came back down. This is normal. This is normally what will happen because this is the projected range that the market's already priced in for the stock. So they're just following their own expectations. So right now, this is a really strong breakout. It could keep going. So I'll keep an eye on it on an intraday basis. I didn't catch a day trade on this today, but I'll probably be able to catch another if it keeps going like this. But until then, I'm just looking for this to basically turn around, pull back a bit, and then once that pullback happens, maybe similar to what we saw over previously, that's where I'm going to look to strike. Um, we just put out a alert for another stock that we mentioned before, CCRN, as it came down. So as you can see, the bottom of this channel, and then bounce back up. If the last time we spoke, I believe I mentioned that I was looking for that pullback. Finally happened yesterday. I got filled on a trade where I had a pending order waiting just for that. And now basically it's on the run back up. So that's an alert that I also poured out in front of the members that we sent out to them. So therefore, everyone knew that that was coming up, and now they know it's time to act. So the system as a GR, like I said, it's a little high right now, so I wouldn't buy it right at the moment. But this lets me know when I'm at the extreme, so that I can wait for it to pull back to a price that's more appropriate, just like CCRN did, and then bam, we get that rebound, and then hopefully it keeps going.
Yeah, so if you're watching this, you're late to the game. And if you're not a member getting these alerts, you need to go head on over to MadisonTradingSoftware.com and sign up, become a member, because I know Mike and the team and anybody that uses the software is constantly helping one another identify patterns, confirm things, utilize risk analysis, and the scanners help identify these things. So let's go ahead and go over that, right? And so if someone watching for the first time wants to get in a fast moving name as such as the meme stocks, right? We got GameStop,
Mhm.
we got Bed Bath and Beyond. What are some of the other meme stock names that are out there?
Well, here's an easy way to find them. So one of the best features about the platform is that you can create a profile of a stock. This is a very unique way of thinking. Instead of looking at it like, well, I want a stock that's in a certain sector and I want a stock that has a certain PE ratio, why not summarize all that into segments, right? Of what makes up a stock score. So we got our four box system. The one thing that all meme stocks should have in common is they should have green on the technical at the time that you're looking at them. You can still find them before then, but I don't think it's worth your time. You'll have a large list of stocks that could be potentially meme stocks. Let's just be honest. You'll usually have probably 100 stocks on a list, excuse me, that could become potential meme stocks. But what I'm interested in is when they start to move. Now, obviously, there's some people coordinating these moves online. You know, they're groups, just like in the old age, you had the newsletters to pump and dump stocks. Well, now you do it online. So those people, they act in a coordinated fashion. We're not in their inner circle, so we don't know where they're going to do something. But when they are doing something, we can see it. So here's what it will look like: Bed Bath and Beyond, green technicals, and the rest of the numbers are questionable. Same thing is true for Fubo, right? Green technicals, the rest of it is questionable, right? So what I'm looking for basically is something that has a similar profile. Okay, you can have um, all red at the bottom and green at the top. It's also a good one. So let's actually check out how to find that. So let's say I go here, okay, and let's say that I go into. I'm just going to create some criteria. Now, what I'm doing here is I'm trying to find a stock that has a certain profile. GameStop is already come and gone, so this one I'll skip. But let's look at price. Let's look for something that's optionable. And next, we want to look at the score. So we're going to look at that as a whole. Boom. So let's just start there. That should be enough, to be honest. That should be enough for us to be able to figure this out. But if I want to go a little step farther, I can also add implied volatility. But I'm not going to do that today because I would have to explain implied volatility. So let me just do that for now. And let's just go right to it. Okay, so I hit apply. Okay. Now, notice I've got tons of stocks on this list. 10,142. No way we're going to go through that. So let's just set a price range, a target price range for the stocks we're interested in. Let's say we want stocks between $2 to, let's say, $50. Okay. I'm just picking that range fairly arbitrarily, except for the bottom part, $2, the upper part, $50. Usually stocks under 50 are your best bet. Usually under $20 are your best bet. But you also want stocks that are above $2. You don't want something that's like 50 cents. That's not usually what's going to make a meme stock. They usually are in a normal price range. Optionable just means they have options. The reason why this is important is because you're more likely to see larger participation and stocks that have options. So therefore, optionability is a good point. Now, for the score, we need to have a green technical. Notice that that cut down our list pretty quickly. So let's just see. We had 2,700 results before, but now that I cut out the middle ground and the negative, I get 1,800 results. Okay. I don't want any green scores whatsoever in the middle. I actually want them to be red. Okay. And for the fundamentals, I will accept yellow, but I actually prefer red. Okay, so if I get rid of yellow, I got 95 results. And if I keep the yellow for fundamentals, I've got 180. Okay, let's just run with it and see what we can find. Okay, here we go. We got a list there. Okay, now this list is long, so I don't want to go through this many. So if this is really a meme stock, we should see people active in stock. One of the things that is required for a meme stock to do what it does is a lot of participation. So maybe I should add another criteria. So let's edit this and let's add volume. But I'm not going to add the total volume. I'm going to look at a 10-day, let's just say a 30, let's do a 10-day average volume. Okay, I'll hit that. Now I have to tell it how much volume we need. Now I know at minimum, I got to see at least 2 million, 1 million shares. Let's say I'll just leave it at 2 million shares, right? So now I'm down to 31. So it's now as soon as I said that I need at least 2 million shares of average volume per day, now I've got a good list of stocks, only 31. So I hit run, and now I can find them. Now guess who I'm going to find? Fubo, right there. Uh, Bed Bath and Beyond, right there. So I can actually see there are lots of stocks in there. There's GameStop, which got repriced, so therefore its price came down. But as you can see, I'm finding a lot of stocks that could be potential short squeeze opportunities. And pretty soon we're going to be adding short interest as well. That's another criteria I could use to find out if it's a potential meme stock. But generally speaking, this is all I need to know. This is a stock I recognize, JMIA, as definitely a potential meme stock. And lo and behold, it's going up. Now, I didn't actually know how much it was going up, folks, before I looked at this. I haven't been following this stock, but I recognize it. And then, sure enough, it had the same move as Fubo, same move as Bed Bath and Beyond. Not as big of a percentage gain, but the same pattern that you break away from this price range, this price channel to the upside. So, in short, we can easily find these stocks just by setting the right criteria on our screener, right? That's all it really takes. And once I have this list, I can actually save it if I want. So if I want to export this, I can actually do that a variety of ways here. I can hit export, right? That sent it to my computer. If I want to save it, I can just click here. I can send it to a watch list. I have one called meme stock candidates. So boom, I hit OK, and now it's added to that list. And if I want to look at it later, I can actually do that by going up here to my watch list, going over to meme stocks, and there's my list right there. This is a bigger list, by the way, but that's it, right? Just like that. So now I actually know every stock in the present that actually has the potential of being a meme stock, and I can always modify my criteria again if I want to add or subtract stocks at my discretion.
That's amazing. And the fact that you can just save that per your criteria, I imagine saves a lot of people a lot of time. Another
Yep.
thing that I was thinking about as you're going through this is I jumped on Twitter real quick and
Hmm.
I put in the hashtag meme stocks, right?
Hmm.
So in order to, I guess, quantify as a meme stock, you got to have a little bit of social media
Yep.
activity, right? And so if you
Yep.
run that analysis on that first chart, you get the names and maybe you pop a few of them into Twitter and see if there's some chatter there that could validate whether there's extra eyeballs. And surprisingly, memes tend to give these stock names more visibility, which tend to move it, which allows traders like us the opportunity to get in, to get out, to get short, to use options, to take trades. And that's the beautiful part about investing. I know,
Yeah. Absolutely.
I know you're a big Twitter guy, Mike.
Well, yeah. Obviously, I'm not. Yeah, guys, I'm not. I'm definitely not the big Twitter guy, but maybe I should start doing that more often. But definitely,
Well,
I'm not.
that's all right. In the news last night, it sounds like Elon Musk is giving up his bid for Twitter and he's moving on to Manchester United. Did you see that?
I didn't see that, but I'm not surprised. Let me see what happened to Twitter. Let's see.
He just tweeted he's buying Manchester United. Like, what is this? Four
I'm
four bill? That's nothing. That's not like the 40 bill Twitter was asking.
well, right now Twitter is right at the tip of that projected volatility on the way down. So yeah, probably they're going to be under some negative pressure. So maybe that was his way of saying I'm just dumping my shares. Good luck, everybody.
Yeah, who knows with this guy?
He going.
Elon loves the meme himself, you know?
Yeah. Well, he if he sold them now, I think he's above where he got them at. So he probably just walked away with some cash and said, "I need to buy something else."
All right. So once again, let's go ahead and invite everybody to take a chance at using the software for yourself. So in the chat, we've gone ahead and added the link so that you can access it, MadisonTradingSoftware.com. Mike, I don't know if you know this, but this is our 21st episode, right? So
Oh wow.
21 episodes of going through analysis, going through the software, showcasing the different features. I mean, that just goes to show how many features there are that we need this many episodes to go through it. So I highly encourage anybody that's interested to head there, grab a copy, and feel free to ask Mike and the team any questions. Otherwise, we'll continue to identify names, run through the analysis, and hopefully shed some light and bring some opportunities to your screens in your world. I guess on a final note here, Mike, do we have FOMC minutes coming out today? Is that correct?
Yep, they're coming out in 44 minutes. So
That could move the market.
it will most likely. So the FOMC minutes, just watch what they have to say about inflation. Obviously, they have a data point from Britain now. I don't know how much that's going to influence our decisions, but I know it's this is a global marketplace and global economy, so therefore I'm sure that data point is going to factor in significantly to some of the stuff. But the meeting, I believe, was from before this number was released, so probably won't reflect that. But the market's going to look very closely at what the Fed had to say, whether they still are on track for continue to raise interest rates. I think the market seems to have discounted that to some extent. Like it doesn't seem like everyone's thinking about it as much as they were before. But if the Fed comes back and it's pretty clear they're still very hawkish, then I expect that's going to affect the market very substantially.
Yeah, we've been rallying for like 2 straight weeks. So some news out of there could definitely tip the scale the other way.
Yep.
Otherwise, anything else that we should be keeping an eye on through the end of the week?
Um, we do have a few other FOMC members speaking. We got the Philly Fed manufacturing on Thursday, unemployment claims on Thursday, existing home sales. These are not reports that generally are big, but I do think we should keep an eye on them after the Fed minutes just to see how things are playing out. But yeah, after today, it seems like it's going to be pretty smooth sailing. And of course, we're going into Labor Day at the end of the month, or at the beginning of next month. So We'll see. But yeah, there's a lot of things happening, I would say. So this week I'll just look at the unemployment. The Philly Fed is what I would look at the most, just to see if the productivity is going down. That would be a good indication of where the economy is going. We'll see from there.
Yeah, and these last 2 weeks tend to be on the lower volume, right?
Right.
Everyone's on vacation. They always say the hedge fund managers are on vacation these last 2 weeks in August. So
Yep.
we'll see. We'll keep an eye on things.
All right.
All right, Mike. Thank you for your time. Thank you everybody for tuning in. If you've enjoyed the broadcast, hit that follow, hit that like, hit that subscribe button. Feel free to drop any questions, comments, concerns in the DM on any of the clips, and we'll get back to you as soon as we can. All right, Mike. Thank you for your time. Thank you, everybody. We'll catch you guys next week.
All right, folks. Have a good one.